Brett Jennings with Silicon Valley Real Estate Journal here with our winter market update and 2021 market forecast. I've been poring over the stats. There's some exciting news to share, so let's get started. Before we get into the data, I want to share with you really what has been driving this real estate market. Because what we can know for sure is that our world is changing. We are in the midst of the most significant shift in how we live and work since the Industrial Revolution. Well, what do I mean by that? Well, around 1800 and prior to, we lived a primarily agrarian lifestyle, right? Most people lived on farms, and around the 1800s, a major migration moved where people began to move to urban centers to take jobs in factories. The next major shift we saw was around the 1950s, where people went from working in factories to really working in office buildings. Now, 2020 will mark the year where we went primarily working in the office to working from home. And this change has people moving everywhere. People moving from urban centers to vacation destinations. People are moving from the city to the suburbs. People are moving from the suburbs in a condominium into a single family home. The common trend we're seeing is that everybody wants more space. So what has this done to the real estate market in 2020? Well, it's really driven things higher. The number of homes for sale is up 33% in the fourth quarter of 2020. However, the available supply for homes available is down 21%, which may lead you to scratch your head for a moment. How do we sell 33% more homes when we have 21% fewer homes for sale? And the answer to that question is it's like toilet paper in a pandemic, right? The paper mills were pumping out toilet paper faster than ever. And it just was such that consumers were buying that stuff up way faster than we could even keep it on the shelves. And that's exactly what we're seeing in our real estate market. And what is that doing? It's causing prices to rise. The median home price for a home in around the Bay Area went up 13.4% in 2020. All of that has caused homes to sell much faster, and we're seeing the pace of sales, how long homes sit on the market, down 48%. So what do we see for 2021? Well, we can know and see that the market is hot and will continue to be hot. Why? Well, real estate is driven by supply and demand, and then it's tempered by interest rates and the stock market. So these are the four factors that will drive the market higher in 2021. The first is the work from home phenomenon. It has and will continue to double demand for housing. We are going to see more people putting their homes on the market, but the current pace of sales and what we expect going forward is that inventory will continue to be low. In fact, our inventory is the lowest it's been in 3 years. This is a graph showing you inventory all the way back to 2018. You can see we have the lowest level of inventory since then, and there is no end to that in the near future. Why? Well, because interest rates are still relatively low. In fact, they're the lowest they've been in 40 years. This looks at a chart going back just the last 5 years of interest rates, and you can see back in 2016, we had rates around 4%. We've seen rates go as high as 4.5%, but now they're down into the mid twos. Now we are seeing rates starting to tick up just a little bit as the economy recovers, but overall, they're very, very low. The fourth thing that's driving the market higher is the stock market. It's near all-time highs. So we have these new families, young families, people who want to move up. Many of them have an employee stock purchase program as part of their compensation. They've all seen that stock increase. Why? Because the NASDAQ went up nearly 47% last year. Many of these buyers are feeling flush with cash, saying, hey, we need to move up. Let's do it. We've got stock in our portfolio that we can cash in to make that purchase. So what's our forecast? In summary, for 2021, we do expect prices to continue to rise to the tune of 13.5%. Inventory will remain low due to the work from home demand. The one variable we got to watch out for is interest rates. Interest rates will rise as the economy recovers. And as I record this today at the end of February, we're already starting to see a small uptick in rates. So that often leads to a question from home buyers: when is the best time to buy? Should we wait? Well, I would say no, because what will likely cause the market to slow down a little bit is when interest rates rise. When interest rates rise, your mortgage payment rises. So if you want to get a great deal on a home and have a low mortgage payment, now is the best time. This is looking at the last 40 years of Bay Area real estate prices. As you can see, we've had 4 corrections over the last 40 years, and every single one of them came when we hit a point in the market where homes became unaffordable. Interestingly enough, as high as prices are right now, the average person buying into the market still has plenty of income to service that mortgage payment, and they have plenty of cash or stock to cash in for that down payment. The other thing to notice here is that typically our market goes up in 5 to 7 year runs, and we are right now only 2 years into what is typically a 5 to 7 year run. So if you have questions about the market, want to talk about buying or selling, reach out to your real estate expert and we'll be happy to help you. Until we talk again, this is Brett Jennings saying we'll be right here ready to help you create a better life through real estate.